Okay, why don't we go ahead and get started and do a quick pledge and then we get to the agenda. Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. The minutes I sent around, I got a comment as to the clarity issues on one of them. I fixed that. I resent it around. Jim, if you reviewed that.
Yeah, I did.
Can I get a motion on the minutes?
Yep, move to approve. Thank you.
And I will second. As I mentioned, Maura Basha will not be able to join us tonight. She's spoken to me and she won't be able to come in. So it's the two of us and we do not need a roll call. So all in favor? Aye. So unanimous. The minutes are approved. And Matt, can you go ahead on the trust fund? I think is the next one, right?
Okay, so just know that this report's been updated. I'm going to address it in my business administrator's report. So the first thing is the first one is Special Education Expendable Trust Fund. The available balance as of December 31st is $241,211.38. Can I scroll down? The capital improvement and maintenance capital reserve fund. The balance for the end of December is $273,071.80, and just interest in the month for $2.31. Unanticipated educational expenses capital reserve fund. This is $200,223.47 at $1.70 interest for the month. And then finally, the facility use revolving fund, $201,333.63. There was building rental for the period for $11,866. And then we just had additional expenditures for implementing the accounting system for $210 for the month. Now, what I did for this report, because Jim asks each month about the contingency fund, which is 2.5% of our net assessments. Right now, it's $545,012. So the amount of money that's set aside in reserve accounts is $1,460,852, including the contingency fund. I have not reported it out like this in prior months.
Question. But Matt, when you calculated the impact, tax impact on the operating budget and all of that,
Yes,
does that get included as a return, or is that?
it does.
addition?
It does.
It does. Okay.
Yes. Originally, it did not.
Yeah.
It does now. I
Okay.
made that change sometime around Thanksgiving.
Okay.
Okay.
Yep.
And just for the clarity for people at home,
Oh, yeah.
where it's showing the contingency fund at 2.5% of the 545,000, that will go back to the tax holders at the end of the year. And then we'll vote on any unexpended funds from this year. Unless something extremely untoward or emergency like happens, which I understand with the new change in the law, that could be tapped with a majority vote of the board. Is that correct, Matt?
Well, it's a vote of the budget committee, the school board, approval of the Department of Education, and approval of the Department of Revenue and Administration. And it can only be used for emergencies. So you really have to get over that threshold of emergency.
Okay, so the Department of Revenue is still involved in a release.
Yes.
Okay, I thought that had changed.
I did too.
Okay.
And this 545 is from the year it's already ended.
Correct.
That's right. Yes. We retain it until June 30th. Well, before June 30th. The board's going to vote in June again to retain it for the next year. I've actually calculated it for next year. It's going to be a lower amount. It's like 530.
And then Matt, as part of the, I think you said as part of the business review, you're going to step us through the
Yes.
the revolving fund
Yes.
balances month to month. Okay?
Yes. Okay. So
basically, in recap, interest coming in, which is very nominal, not almost non-existent. revenue coming in for the rental to the SLC,
Yes.
and then a $210 charge as the remainder of the new accounting system.
Yeah, I don't want to say remainder at this point, only because we are having implementation issues. I'm talking to them. They're talking to us about getting us free training, but they still haven't completed all their training yet. And there's a whole bunch of items that they need to complete with us.
So one more question about the funds, this may be what you're gonna address,
Yeah.
but these are all current and checked against trustee balances or?
Yeah, so if you wanted to look, I put all the trust fund balances in your folder. If you
That was
want
kind of hard for me to follow.
the trust fund balances.
Yeah, because it's a whole different format.
Yeah, right. So, I gotta get down to it, it's right here. So, these are the statements that we get from the Kingston trustees of trust funds, okay?
Yeah.
And basically what I'm trying to tie to is, up on the screen, that market value right there,
Okay,
okay? And then what I have to do is, when I look at the individual months, I have to add the interest in for like the month of December.
yeah,
And then tie it out to the amount up above,
right,
okay? So this is a calendar year reporting, because they do theirs on a calendar year basis when we're on a fiscal year.
okay.
Okay.
That makes
That's
sense.
why it's confusing.
Yeah, I guess. So you have to match up the balance for our year end to whatever they show in their transaction
Yeah.
page.
Yeah, yeah. But we have put all of this stuff into our accounting system, and hopefully in the next couple of months, I'm actually gonna start producing these reports directly from the accounting system.
Okay,
So the whole format of these reports is gonna change. Okay,
Yay, that's what I want.
but it's
so
just,
this data goes in the way we get it, but the accounting system is able to sort it to the months you need?
yeah, I can just run a report and it will automatically prepare the report. It should prepare the report the way that the committee wants it. I mean, the format's gonna be a little bit different. Okay, but it should produce it. This document that I'm doing right here, that's manual, and I've been doing it manually ever since I arrived here.
Yeah.
Okay, and even long before I got here, I know it was done manually as well.
Right,
Okay, because the trust funds were not in the accounting system until maybe a year and a half ago.
okay,
So,
Just your word, Jim, there's of the 4 funds,
yep,
3 of them are managed by the trustees of the trust funds.
yep,
The revolving fund is managed by Matt.
okay.
yes,
Here, it is under the control here of the district as opposed to under the control of the trust.
yes, that's correct.
And why is that different?
Because the statute requires anything that is a reserve account to be held by the trustees, except for the contingency fund.
Oh, interesting.
Okay,
Yep,
all right. Let's see, expenditure reports. So for health insurance. Now, I've written more about this in my business administrator's report, okay? I've got screens that are in the way here. So, year-to-date expenditures for health insurance is $1,893,000. We have encumbrances of almost $2.4 million, which leaves a remaining balance of $655,650. Now, last month, if you recall, it was something like $730,000. So there's like
53 I'm showing.
so there's like there's a $30,000 budget adjustment that was approved by the school board last time, and it's in my budget committee report as to what the purpose was. Okay, the remainder is we found out that the system isn't encumbering health insurance for retirees. So as part of the CBA agreement for the teachers, if a teacher does early retirement, we're paying a portion of the health insurance up until age 65. And that isn't being encumbered, but we're fixing that for the next report. Okay,
so how much in arrears are they?
in arrears,
Well, they're not,
it's in my report. I'm doing this.
oh, it's a report.
No, I put the narrative in my business administrator's report.
Right,
So I can, if I read it off of that, I can tell you how much it is,
okay.
okay?
So we have a deficit right now?
No,
Okay,
No,
All right.
we're okay.
Okay.
But part of the difference is gonna be, it was 753 at 655, so you're roughly 100,000 gone. 30,000 was the budget adjustment, so 70,000 is basically driven by this catch-up of the health insurance being encumbered for the early retirement. Is that, I'm understanding,
Yes.
is that correct?
Yes. Okay,
So that number, at
665
65, that doesn't reflect
retirees.
retirees.
Yes, so I've done a quick analysis and it should, because remember the health insurance premiums in here as well? The premium holiday, I'm gonna be reclassifying that out soon.
I didn't mean that we had a deficit in the total
No,
account,
I know what you meant.
a debit against the account.
Exactly.
Right.
So my quick math is telling me the remaining balance should be about 137,000.
Off of the 665.
Yeah, because like a portion of that includes the premium holiday.
Okay.
Okay, which is money that we got back from the health insurance pool because the teachers didn't use the premiums.
So if there are no changes in health plans, will we have another premium payment due?
Well, I'm seeing an uptick in the use of health insurance. So and we get the premium in like July and August, okay? So I'm not anticipating a return next year. And if we do, it's gonna be minor.
Because,
The last 2 years, we've gotten significant returns of premiums.
right,
I'm talking $300,000 to $400,000+ each year.
okay, so the return aside, out of this 500, it's now like 525,000 roughly, when you take out the retirement.
Yeah,
Out of that, are there any premium payments coming up before the end of the year?
I think at this point, I have about $137,000 remaining in that account.
Oh, really?
Yeah.
Okay.
But the 137 plus the 430 for the premium, or are
Well,
you
the-
spending the premium?
No, I can't spend the premium unless I go before the school board and ask for permission for that, because we'd have to receive that as unanticipated revenue. We have not yet done that, okay? That, I would only do that if something bad happens.
But when you're saying 137,
Yes,
that is excluding the 430,000 premium. You're just saying what's going to be in the balance after, but there's still the 430 premium that we're likely not going to get next year.
right, so yes, so basically, that 137,000 is available for appropriation. That it's authorization from the taxpayers that we can spend the funds.
But the other 420 is not, because we
Correct.
haven't, it's unanticipated funds, so
Correct.
at this pace, if things didn't change, I think I can get to the bottom of what folks are asking. What's being asked is, will there be, unless something changes, there'll be roughly 520,000 left at the end of the year, or 550.
Oh, is that what you're getting at?
Yeah,
All right. The revenue side is coming in at about 400,000,
Which is the premium.
which, yeah, pretty much is the premium.
Yeah.
Okay. Then I actually calculated a year-end
I'm
number.
not sure what you mean by revenue side, because the money's already, oh, you mean money that hasn't been paid by the towns?
Yeah, so like,
Okay.
what he's getting to is the amount of money that's gonna go back to the taxpayers above the 454,000, okay?
Yeah.
Oh,
we haven't received all the revenues yet.
What I'm trying to get at is that this, what Matt's saying is, there's 600 and, I'm sorry, my vision, is that 655?
Yes.
655 minus, he's got, in his report in a minute, he'll share that it's roughly 130 needs to be used to offset how much is it for the retirees?
Oh, it's in my report for the retirees. What I'm
So
saying is
whatever that amount
$137,000.
Will
If
be left.
year-end ends today,
Yeah, okay.
there's $137,000 that's gonna go back to the taxpayers.
In addition to the 420 from the premium,
Correct,
provided that we don't have an emergency and ask for authorization to spend it.
correct.
Okay.
But we still have money coming in from taxes, from the towns, right?
Well, that's
correct.
separate.
This
We're
is-
talking about totally separate
Yeah,
things.
okay.
We're talking about just health
So
insurance.
none of
right
it goes into this.
now. Exactly. There's other, that's a way bigger budget discussion, Jim. Like we're not even, I told Matt this morning, I said, we are not ready to talk about year end yet.
Okay.
It's February, January. We're not even close to.
Yeah, I was just trying to get a sense of the flow, cash flow here.
Yeah, so for insurance, if things don't stay exactly the same and we close the year today, there'd be about 550,000, because you'd have the amount that Matt's saying would be left,
Premium
plus exactly, and I just wanted to get to for insurance.
Yeah, I know
For-
that's
No
what I was
idea on
asking.
exactly, yeah, okay, good. Yep, I just didn't want to, the rest of it, we don't know yet, because it's too early.
Right.
Okay, so for non-health insurance expenditures, they just get right to the end of the report. It's off my screen. It's just barely off my screen. Oops. Okay, so year-to-date expenditures of $13,088,315. Encumbrances of $14,786,590. Right now, I have a remaining balance of almost 2.5 million, or 8.21% of our general fund appropriations. Okay, most of the encumbrances right now are encumbered for payroll and related benefits. Okay.
But, so again, help me understand, so we have already assumed payroll and benefits in the encumbrances for the whole year, correct?
Yes, there's a small amount that's not in there yet, because we're still populating the system for the supplemental pay. So if someone does like coaching,
Yeah.
okay,
Yeah.
for the rest of the year, that's not in there, but that's a small amount, so it's
Correct.
just time.
Because
So is this different than previous years, the way you,
No,
okay,
what I'm trying to understand is, so from October to November, unencumbered dropped by $750,000.
yes.
From November to December, unencumbered dropped by another 400,000. What is what spending is driving
Okay,
those additional encumbrances?
all right, so in my business administrative, let's just jump to my business administrative.
Okay.
report.
Can I just say in the future, we should just start with that?
Yeah.
Because it's way easier to get the update
Right.
and then go through everything.
Yeah.
Just a thought.
yeah.
Okay,
By the way, did you all clarify that Maura had a family emergency today? She had to go to a doctor's appointment.
I didn't get it because I just said that I spoke to her.
Oh, okay, great, thanks. I just wanted the public to know that it's a short notice thing.
okay, so we had significant expenditures in the month of December would be special education tuition payments totaling 258,000. Professional services, 25,000 for special education, fuel oil of 13,000, and field maintenance of $15,000. Those are the significant non-payroll items, okay? And a lot of these items, so basically what's gonna happen from here on out to the end of the year, I'm gonna get a request for purchasing items. It's not like they've encumbered everything for the entire year, okay? And so by March, that 8% is going to go down to like 3%, and then it's going to go lower from there before the end of the year. Okay.
What I'm still not getting is, so we know what tuition is for special ed. That's not encumbered already?
Not entirely. So if someone changes their IEP during a period, I would have to come before the committee here and ask for budget adjustment if I need more money. But if there's a change, they don't encumber the funds for the until they know what it is. But when they do,
So this would indicate that we got $250,000 that we did not expect in special education.
no, that's not entirely true. Because remember, the $250,000 I gave you also includes stuff that's encumbered. So if I encumber something, what it does is and you pay the bill, it reduces the encumbrance amount and then increases the expenditure.
Correct.
What I did in my report is I didn't correlate what was previously encumbered. Is that what you're looking for?
Well, I'm just trying to understand, when the encumbered number goes down, it means that net, we have either spent or committed to spend an additional amount of money that we didn't plan on previously.
Or that, well, I wouldn't say didn't plan on previously. School districts are a living organism. They throughout the year, people buy supplies, things that they need. IEPs change, kids get placed into different placements. So maybe for September, October, and November, Johnny wasn't going to a specialized program out of district. That's dynamic, and sometimes a kid moves out and we don't need to encumber for the rest of the year, and sometimes places invoice. I just think it's not that black and white, it's more dynamic. There are costs that I don't tell the administrators encumber everything for the year in September, because they would encumber like the maximum. We say to them, you know, buy things as you need them, so that if we have a budget freeze or something happens that's unanticipated, which we've done 3 times at least, there's funds available to do that. So I don't know, I mean, Matt can generate, I'm sure you see the reports of what's on the manifest for what the expenses are. But theoretically, as you go through the year, the amount of money left over at the end of the year does lower by percentage as you go through the year.
Correct. And all I'm trying to understand is, my understanding is we take healthcare, and we encumber that for the full year.
Okay,
We take payroll, and we encumber that for the full year.
for the most part, but there may be changes.
Right, we take special ed, and we encumber that for the full year.
For the most part, but there may be
For
changes.
the most part, but I don't.
I would not say
don't
for the
even
whole
wanna
year for
say
special ed.
most. I want to say for a majority.
Right.
So therefore, in my mind, all I'm trying to understand is when we're spending extra, where is it going? Because those are the big spending pieces, right? For the budget.
Well, there's also,
Payroll, special ed, and health insurance. Those are the biggest.
well, don't forget about supplies,
Yeah.
equipment, transportation. There are many,
So
many
is
buckets
transportation encumbered for the whole year based upon the contract?
Yes.
for that contract, but maybe not necessarily for special ed, depending on what happens.
But the bulk of the spending is encumbered at the beginning of the year. Otherwise, we wouldn't show encumbered at numbers of 15 and 16 million dollars in September.
I wouldn't say the bulk of it, because I don't even want to argue that the $2.5 million is going to be available to reduce the taxes at year end. We are at where we have been historically. So if you go back to the reports in the prior year,
That was my question.
we're
Where are we
we're
compared
pretty
to
much right on.
previous
we're
years?
right on.
Normal
So
years,
that's why I'm not
not COVID years.
overly excited about this number 8.21% remaining. I'm not overly excited that that's a high or low number. To me, that feels comfortable or correct where we should be.
Yeah, and I just want to clarify that it's not, quote, extra spending. It's spending that's allocated within the budget.
Yes.
So like there are things that
But
people,
It's over and above the big pieces that we we encumber at the beginning of the year.
yeah, oh yeah, I agree with that. Sure, that clarification makes sense, yeah.
And generally speaking, there's other big pots that come in each month that keeps on reducing that.
Yes.
That's what I'm asking is, what are those other big pots?
Yeah.
Okay, I can change my reporting to include changes of encumbrances as well.
Yeah, I mean, that would just let you know, oh, there's this that came through, other than, because we try to standardize and say, here's what we think payroll is gonna be. And there'll be differences, some people quit, some people come in, there's different
Right.
amounts.
Dynamics,
There's
yeah.
differences in healthcare because some people change their numbers or what have you.
Yeah.
But
Or,
we
yeah, or
then
they have a
we then
baby or
an
they get
idea of
married.
What that number is, that's all I was trying to
Yeah,
get.
like we have a wedding this weekend. Right? I know with staff members, I don't know which insurance they'll go on, but like it happens a lot. That's why I just want to be cautious about the dynamics. Someone's having a baby, right? Literally right now. So it's like,
Right now?
well, in the 48 hour, I don't know, I'm not a prophet, but they're definitely on the way.
All signs point to yes?
Yes, all signs point to yes, but I'm just saying we're
Correct.
on camera, so I'm trying to be careful about dynamics, right? Like that things are pretty pliable with the school district when you have a lot of people.
So as
We're
far
not
as,
talking extra money, we're talking about the consumption of the unencumbered.
There you go.
Yes.
Perfect. That's
so
perfect.
for the purposes of Matt's reporting, I don't think we need to know every nickel and dime, just the big ones, right?
Yeah,
Right,
sure.
big
I
stuff.
can do changes in encumbrances. That's fine with me. Can I move on to revenues?
Sure.
Okay, so revenues this will answer Jim's questions. Revenues for real estate taxes has been recorded for the entire year. So you can see the first 4 lines right there are recording the full amount of the revenues. Okay, it has been adjusted to match the tax rate, and then so this report is accurate for the budget versus actual as well. Now, major items that are in here. I have it in my business administrator's report, but the first one here is adequate education grant. We received just over $1 million from the state of New Hampshire. We also received $229,000 in CAT aid, that's special education aid, and then an additional $11,000 for vocational transportation. Let's see, anything else? Oh, big item in there, 19,000 right there in the middle, this number right here. That is the sale of the seminary. Now,
Why isn't it 20?
because there was a fee that we had to pay as part of the HUD agreement.
Oh, okay.
Okay, but I was anticipating you asking,
$2
here's
for land.
$180,000, okay?
Right.
And this is gonna make Jamie's head spin, because on the financial statements, we can only record current assets and current liabilities. We took a mortgage of $180,000 from Chimberg for the sale of that property. That's a non-current receivable. I can't record the revenue because the revenue recognition hasn't been,
Well, it won't, he has 3 years to pay it, so we wouldn't record it as revenue until he pays it.
so
So
it's a
does he
non-current
pay so
asset.
much every year?
No, it's just 180 and he can pay it any time in the 3 years.
Oh, I see. Okay.
So if someone asked you that the revenue is only saying $20,000, accounting rules don't allow me to put the extra 100.
Well, we haven't received it yet, so
Yeah,
we
we haven't
can't.
received
you
it.
It's
can't
an
use common
account
sense.
receivable.
Right,
Yeah.
Well,
now,
that's my head is going to work. So, Matt tomorrow wins the lottery and says, see you later, bye, I'm now 100 millionaire. Where is the record that we are due $180,000?
It's in the purchase and sale.
it's on another, okay, the
Great
district
question.
does 2 sets of financial statements. We only present one of them, okay? The other one only gets done as part of the audit, and that is a set of financial statements similar to the way a corporation does it.
So that's like
It's
balance
full
sheets and all that.
So that's where it would show up. So
That's-
in our book somewhere, there is a long-term receivable of $180,000 that we are tracking as.
My instant answer was it's in the purchase and sale and the closing documents.
Yeah.
So that would be where I would go, Jeannie, but I'm a lay person, like,
Yeah.
you know,
The
the
system
finance folks.
The system can't do it. The system can only do current assets, current liabilities.
But in case we get run over by a train, which is way more gruesome, you know where it is. It's in the purchase and sale and the closing documents.
Yes.
Right, the 180.
So when you guys are, when you guys cruising up to.
You said your head was gonna spin.
Yeah, it's
He
a
called it.
in the book somewhere.
Yeah, he's saying it is, but I'm just saying the quickest place to find it is in the closing documents and in the purchase and sale.
No, think of it this way, it just follows.
You go to jail in business world for these things.
No, but if I recorded this as a revenue, it would flow to unassigned fund balance.
Yeah, you
Well, you
can't,
can't do
and
that.
we can't record a revenue that we haven't
That's right.
received
Can't do
yet.
that.
And I don't have the
It's
cash.
public
You can't.
accounting.
Correct.
You see what I'm saying?
So that brings me to a question about having recorded the taxes as revenue. Does that mean we've actually got the money, or it means it's due us?
It's due us.
But
Okay,
it's a current receivable within the year.
right,
Correct.
yeah.
What he's saying is since this is a
No,
multi-year
I get it,
receivable,
right.
he doesn't have it in the books in the same way. Otherwise, it would show up as this is extra money that's available. and the
To
money's
return to the
not available.
taxpayers,
But
exactly. You got it.
That's what I figured, is that we didn't get that money yet.
Holy, I can't believe we just got through that. I got nervous for a
It's
second.
due us, it's due us.
The mask is like hiding the smile.
I hate the
You guys
mask.
are understanding.
That's hard.
Okay, but I will point out that on one of your aids, we're over what was planned, so we got extra money on the catastrophic, it looks like,
Yes.
229
Yeah.
versus
Yes,
180.
The state only allows me to budget, at this time, they only allowed me to budget like 83% of what the state was gonna offer. That was gonna be over. In this particular tax year, I was able to up it a little bit, okay? But I don't wanna go the full way because, like, here's an example. For Fremont tuition, I put in $4 million, okay? We're billing out quarterly 978. So it's gonna be shy by the budget by like $70,000. But it's like within 0.5%,
It's very close.
very close. I'm trying to budget revenues extremely close, because the closer I bring the budgeted revenues, it drives down the tax rate.
So let me ask you a question. This is just related to this. there's been a lot of articles in the paper about the state is giving additional money from the sales and use taxes. Is that only to towns and municipalities, or
Yes.
is there anything going to school
No.
districts? Just towns and municipalities?
We received additional funds because the state allowed us to use our 2018-19 enrollment numbers for our aid.
Yeah.
So we did receive additional money there, and we could have petitioned the board and done a public meeting to expend those funds, and we chose not to do that. We chose to use it to offset taxes.
Yeah,
So that's gonna go into your kitty of what happens at the end of the year.
yeah,
I just
So
wasn't
was
sure if that was
included when you
just
calculated the
municipalities or
tax
was
rate?
that piece of it too? That's a new one.
yes.
Okay, so I've got a question about this, the state grant, or the state money adequate education. grant.
Yes,
Is that what we normally receive, or is that different?
it changes every year based upon how they negotiate the calculation,
Is
okay?
that something that they increased this year?
That's what I was just saying.
Oh,
That's
okay.
the amount that I just said.
Yeah.
They gave us our enrollments for 2018-19,
Yep,
and they were way higher than this
Right,
year. They
right.
gave you the higher of the two.
oh, great.
So that was really helpful.
Now, I do want to just kind of throw out like a little like problem about adequacy education. As this school choice starts kicking in, the more money they start taking out. So for like next year, it's not going to be enough for me to even be reporting it to you. The following year, it's going to be like a notation. The third year, it's
It'll
going to
be
be
more.
like, you're going to see it.
Has that passed both houses?
I believe it's,
The initial phase does, they're talking about expanding it already.
yeah,
They just had hearings on, either just had them or they're having them this week.
yeah. So, okay.
Yeah.
Right now, I'm reporting revenues of 28,202,000. Uncollected balance of 6,611,000. Now, remember, the use of fund balance is a budgeted number. I don't record an actual amount in here for use of fund balance. So really, the amount to be collected is more like 4 million. And that's in my budget report.
Is the state adequacy education, is that the normal payment cycle? We've only got like a third of it. Is that the normal
Yes,
payment
that's the
cycle? that
normal.
they're
They
on?
just pay it throughout the year.
Okay.
Okay.
It's the same with the two towns, right? The taxes and the Fremont bill.
The towns pay us on a monthly basis.
Okay.
Okay. And
Fremont pays in 4 payments.
in
correct?
4 payments, right? And so this, by the way, the second payment for Fremont's tuition is the beginning of January. So it's not gonna be reported in December, okay? So, let's see, open items? Are you okay with that?
Yeah.
Roof damage at the seminary building, we sold the building,
Yeah.
so I'm gonna take it right off.
Yep.
Okay,
absolutely.
so 4 leaks here at the high school, it's now 5 leaks. What we're gonna do is we're gonna try to knock off 3 of the leaks with a contractor because they're small. We're also getting proposals for the silo. We have figured out what the solution should be for the silo. I think the latest proposal is like $5,800 to repair the leak on the silo. And then
Did they ever do that caulking I suggested on the?
not yet, no, it's too cold.
Oh, it'll just freeze, yeah.
Yeah. Okay, and then for book purchases, the newest one is right here. And it's Heinemann,
That's when we talked about the other day.
yes, and it's for these items. It looks like it's a grade specific classroom book. And then I think there's also in here, Teachers College.
Oh, you went way too fast for me.
Okay,
No, it's okay.
this is the
I'm good.
purchase orders for Teachers College, but then these are the specific items that are within that. Okay, purchase.
Okay, I'll go through those. I just haven't a chance to do that yet.
Okay,
Oh, and they're the books you wanted to see, Jamie.
Yep. And I assume the yellow ones must be missing since they're highlighted and there's no check next to them.
Don't assume anything.
yeah,
We know what that does. I'm not gonna say it on camera.
yeah. I would say it's backordered because it says backordered over here, 1.
Yeah,
Oh,
okay.
yeah,
Okay. All right, so. Done with, oh, I should have taken off bookshelves. Now for the ACH procedure, again,
Can I just ask quickly, and you can fill me in later? I just want to make sure that the schools, the teachers have adequate bookshelves for all of those books, because we bought a lot of books.
Yeah, we're not buying $10,000 bookshelves.
Good,
We're getting,
less expensive ones,
Yes,
but we
yes.
figured out a plan for that.
yes,
Okay.
we're working on it.
All right,
Okay. Now for the ACH procedure, 2 of the 3 people have signed their forms.
Oh,
and
good.
They're filed with their personnel file. Okay, me being one of them, okay. When we do talk to vendors about like, did you mean to send us this form, is the question we ask them, and they say, yeah, we're supposed to be doing these questions too, and we haven't been doing it. Okay,
Yeah, I mean, getting sloppy there is risky, so that, I mean, just making that part of the DNA of the office is important.
yes. Okay, so let's see, let me clean this up a little bit. Now, business administrators' comments, okay. And I think we're running out of time, so I want to go as fast as I can. So we've issued RFPs for regular day and special education transportation. We submitted the school food service RFP to the state for their approval prior to issuing. We're also in the middle of creating banking services and engineering RFPs. Banking services, you know, right now we use TD Bank and they moved out of town. We want to go and kick the tires on looking at the remaining banking services in the area. Okay, we will also solicit proposals for electricity, which I can't issue a formal proposal because basically what's happening is the rate for electricity changes so quickly, they can't hold the rate for more than a day. So what I'm gonna do is I'm gonna work with Jamie and try to like negotiate a new rate that's gonna be effective for November 22 for a certain number of years going forward.
oh, do what some of those other districts, I think it was Exeter,
Yeah,
they have a locked in rate for a number of
So-
years.
If you do, you're gonna do multi-year?
well, we had a 3-year contract originally before. And it's really beneficial for the district to lock in for multi-years.
But if for some reason we have a recession and rates go down, then you're locked into that higher rate, right?
Yes,
Okay,
Just like email, you lock it in,
right.
price protection plan type of thing.
Yeah, I mean, the rates are pretty high right now.
They're high.
okay. So I also linked here, basically, this is the PUC site right here. And anything over here, like for utilities, these are the utilities that sell for like third-party retailers, okay? Right now, we use Constellation Energy, New Energy over here, and they're a Unitil provider, so they can sell to Unitil customers. So I'm gonna be contacting all of these that are on here for Unitil and try to get prices from all of them. So it's gonna, I wanna make sure for like Jim, you understand that I'm going for a lot of different vendors,
Right.
okay?
Is there any qualification of these vendors other than that Unitil lists them on their site?
No, this isn't Unitil, this is the PUC,
Oh, the PUC
right? So they have to,
meet certain standards?
right, and the PUC has to approve them to sell on that network.
Okay.
Okay. All right, so again, a repeat from the prior month, when the process for the budget is almost complete, I'm shifting my focus to the accounting system. We found beginning balance issues related to importing data. The trial balance has been updated except for the grant fund. We're focusing on W-2 reporting, which actually we finished it this morning. As part of the import process, we found that there were 13 employees that were not imported from the old system. Bank reconciliations for the main account have been performed through December, and we faced beginning balance issues here as well.
What do you mean by here?
You know, in the bank reconciliations, basically, when you reconcile, you carry over the balance from the prior period, okay, like outstanding checks and so on. I had to create that from scratch.
No.
Okay, the system didn't have any data in there. It literally took me 4 days to do the first bank reconciliation. When I did December, it took me 15 minutes.
Okay.
It's moving in the right direction.
Yeah.
By along.
Is any of that time recoverable from the company? Because they were supposed to port all that stuff over, right?
Yeah, in a lot of cases, they poured over the wrong data.
Well, they call that massaging the data, Jim. There's a way.
But is there any
No.
cost for,
what they're gonna do is they're gonna try to give us free training.
Okay,
So, school,
Normally they say we mapped it wrong because we don't know your data, you mapped it wrong.
Oh, exactly, that, I didn't want to get in it, yeah. No, I'm
okay,
gonna stop. Yeah.
so, school food service has a point of sale system, which it looks like a computer with a cash drawer and a screen. And, one of the cash registers failed at the high school last week, and we had to rebuild one from another PC, okay? So, that system is antiquated and we need to get a new system. What I'm gonna try to do on Friday is to try to get a replacement cash register system for the entire district, okay? And, but pick one that is, that can integrate seamlessly with our student information system and our payment processing. So when parents pay for school lunch, they're using the same processor, okay?
is the cost gonna outweigh what it would be to just upgrade the one that's not working?
We're gonna be looking at upgrading, but when you upgrade, you also have to upgrade all the hardware,
Yeah,
It's
okay?
complicated.
Yeah, so right now the system is so out of date, it does not talk.
when you
to
say
us.
the system, are you talking every school or just?
Every school for the point of sale software. So when you go and buy something, you go up to the cash register.
Right,
Normally that cash register is integrated with the student information system.
Yeah.
So that at the beginning of the year, they just bring in all the students and they have a picture of the student. So when they come through the line, they can match up the student and make sure some other student is not taking their identity,
Mhm.
okay? That function stopped working recently because that system is so old, it doesn't integrate with any of the student information systems that we've had, not the current one or the one previous to that.
It is something that we need to look at, but just to clarify for the public that are watching, I know you guys probably get this, but it's the point of sale system that's the problem.
Yes,
We need that software to be able to talk to Alma.
yes,
oh,
It's not doing that. It's too old. That's the simple short version.
correct.
How much it's gonna cost, we don't know yet. So,
Okay, now I'm gonna jump into the warrant narrative, okay? So, what I did is I created a document here, and this is in my own language about each of the warrant articles. Do you want me to go over them really quickly?
I don't think you need to. We're gonna go through them tonight when we do the presentation and the vote, so you.
Yeah, the only thing I'd like clarification on before the meeting is the technical one.
The device protection
Device
plan?
protection, yeah.
Yep,
Okay, so what I'm saying here is we're asking to create a fund to operate an insurance plan similar to that found at Timberlane, and I linked the agreement that Timberlane has. Parents will then have the option of paying an insurance premium for upfront for actual costs or damages that students have due to their machines. All insurance premiums will be available to pay for damages for participating students. If parents opt out of the program, they'll be responsible for actual costs of damages similar to the current operations that we have right now. And I've given a link here to Timberlane's care and use guide, okay? Because Timberlane's doing the same thing. Under Timberlane's example, the cost for a parent for a program ranges between $10.50 and 42 cents per year, depending upon the student's grade.
$42.
I'm sorry, $42, depending upon the student's grade. Once in the program, they'll not pay any more for repairs to that student's Chromebook. If they're not in the program, they're responsible for actual damages. This fund is a non-lapsing fund where the program revenues are restricted to this fund and can only be used for the stated purpose in the warrant articles.
So
Here,
this is you're just asking for permission to establish this fund.
right. We're asking for permission to revolve it from year to year. And the
Right.
basic idea is the five of us all buy new computers. We all throw a sum of money, let's say $100 into a kitty. Yours breaks and mine doesn't. We pay for yours out of the kitty fund. It's just a big kitty.
Right.
It's,
But I like how that was, that's why I wanted to check it.
Yeah.
It wasn't clear to me previously, and that's well stated. You opt in or you opt out.
Yeah.
You're either choosing to pay a maximum amount and have that insurance cover you, or you're choosing to own any actual damage.
you got it.
But from the description, it sounds like we're self-insuring. We're not buying a program.
We're not buying
We're not.
a program. We're
we are self-insuring.
we're self-insuring.
The parents that just want to say, okay, I'm paying this up front, and I don't want to hear about any breakage that my kid does, because my kid's hard on everything, he breaks everything at home too.
You got it.
They can do the insurance Otherwise, some people might say, it's not worth me putting $42 in the barrel, my kid doesn't break anything. And
Exactly.
if he breaks it, I'll have to pay.
Yeah, and I don't know about you, but I pay $50,
Yeah.
right, or 100, because I know my kids, right, but other people's.
You
kids
notice
are
they use the he
different,
pronouns, because those where it gets thrown out.
Yes,
All right,
yes.
So that's the one that I wanted to just say.
okay,
The other ones I think are pretty self-explanatory, unless Jim, you want to see more.
okay. Financial condition, how much time do I have? You're fine, I don't have 10 minutes.
You got
10 minutes, you're good.
Okay, so I'm gonna skip forward. Oh, no. So basically, I restated the facility use revolving fund. The accounting system's beginning balance started off with incorrect balances that were imported into this, imported by the software company, which have been corrected in this fund. In the meantime, I manually created reports for this committee and made mistakes. The restated reports are linked here.
Okay.
So this is, so basically I have.
Okay, this is a step through we talked about.
Yeah, that's what you were looking for, Gene. I
Yep.
remember you asking me about it too.
And there's the 189,676 to where the 201,333 is that we just showed previously. And the 189 in December was the one I was having problems tying back in, and it's because the original balance was off. And so the activities and the balances did carry forward, tying back into the accounting system. Matt and I had little discussions on that during the course of the week.
Yes, just remember that report that I've been doing is manual.
Yep.
I have to get it so it comes out, so it's automatic.
But that's the positivity of the new software is that
Yes.
you're getting, like, what I'm hearing from the business office is we are making gains. It's just been slower than we'd hoped.
Yes.
But I'm not surprised. I mean, when you go to a new student information system, you have the same problems.
Oh, yeah.
Data problems.
Actually, I'm really kind of grooving on the idea of some of these expenditure reports, like this. I just got a tangent here for a second. So the non-health insurance right here, for years, I couldn't tell you how many teachers were in there compared to the budget because the system didn't generate it. We're not going to be able to do it for this particular reporting period. Next year is going to be better. It's going to be about like 95% of the way, and the following year is going to be awesome. Okay, so pretty soon we're going to start embarking on a project to really start cleaning this thing up and making it so we're tying it out to the positions.
Well, I would think with the new system, you have all kinds of reporting capabilities that we didn't have before, and that was a question of harnessing that power for
Greater efficiency.
for allowing us to better manage the district.
Yeah,
That's why you
just
have a
greater
system.
efficiency and speed and transparency. I mean, that's my goal, is the transparency.
Okay, I'm going to move on. As of yesterday, we had $3.8 million in our operating account, which is sufficient to run the district for 1.2 months. Let's see. Also, I just want to remind everyone that we're trying to reduce our impact on the member towns. So what you'll notice, if you try to compare this balance to prior years, this is significantly lower, and this is by design. Okay, I don't want to smother the towns. Let's see, on the revenue side, so basically, we have a budgeted use of fund balance of $2.5 million. 2.3 was a return of surplus, and then there's another $100,000 for 2 warrant articles to come up with the 2.5. And so if you look at that, we have, if you add that budget number into that report, that means that we have 88.3% of our total budgeted revenues already collected. Okay. Let's see. I went through the significant items. I spoke about the GAAP financial statements. I also spoke about Fremont School District's second quarter payment went out in the beginning of January. So you'll see that in the January revenue report. I'm going to skip the expenditure part because I think we kind of hammered that one well.
Yeah.
And then, so I'm going to go down here to future considerations. Now, we continue to evaluate the septic pumps at Bakey. We're waiting for one vendor, which we should have gotten yesterday afternoon. Another thing is we're looking at a company for septic pipes. We're going to go and camera the septic pipes that are underneath the building. And because you remember at Bakey, the pipes that are going up through the top, they're cracking and they're opening up. Okay, there's a company out there that can go and line that with PVC.
That was great news.
That's
Okay.
great.
And it could extend it, and it will fill that crack. Okay, and it
That's
could
great.
extend the life to like 50 years.
It's fabulous.
However, we want to scope those pipes that are underneath the building.
Yeah.
Okay, and be absolutely certain what we're gonna be doing. Like, if they're perfect, we don't have to do anything.
I'm fine with that. I just don't want to see the videos. I'm good.
So it's gonna be just $1,500,
It's well worth it.
okay?
Especially before you go.
COVID spending. Last month I had, Jamie asked me about, what we're spending money for COVID costs. Right now, it's only about $4,100.
That's for the year?
Yeah,
Okay, so that's pretty
So
low.
do we have a bunch of stuff in inventory?
yeah, we had some stuff in inventory, and the state also gave us a couple pallets worth of PPE that we had to. go
Yeah,
and
we've
send a
gotten
big
some
truck
things
up.
too free. Yeah.
Okay,
Just, are we expecting, I see the administration, I don't know what the facts are. I see the federal administration is talking about sending out N95 masks to all districts. Are they?
I haven't seen
sending
that
to
yet
us?
for a district. I've seen it sent to people's homes. So I don't know yet.
Yeah, okay.
okay.
If something comes in on that, let me know.
Yeah,
I'm
yeah,
interested in
sure.
Understanding
I'll
that.
forward it to all of you.
I'm skipping the warrant articles, but I'm gonna move on to the MS-27.
Yep.
What this is a summary of all the warrant articles. The state, it's a required form by the state, and I need to have, oh, it says school budget committee certification. I thought it was the school board. Dang it. Anyways,
both?
I want you guys to review it.
Yeah.
And approve it. I'm gonna bring it to the school budget committee tomorrow night for approval. But basically, these are all the warrant articles. The left-hand side are expenditures from the prior year, and then you'll see like school board appropriations, budget committee appropriations to the right, okay? And so this, it brings down the total amount that's gonna go before all the taxpayer, to the taxpayers for all funds. Now, importantly, it also shows all the
Including
revenues,
warrant
the budgeted
articles.
revenues. But importantly, is if you go to the last page, the supplemental schedule, remember at the deliberative session, you can only change the amount of the warrant by 10%.
Yeah.
This calculates that. Okay,
So the total number here would be the budget plus the dollar values on the warrants or no?
it's every single warrant article, it's the operating budget plus
Plus all the other warrant, okay.
all the, yes.
That's what I was
CPA,
understanding. I just wanted to verify that.
Yes,
Okay.
okay. All right,
So that 10% could go up or down depending on,
yes. But it just calculates the threshold
right,
right there.
Yeah.
Okay, that's it. Is there anything you want?
the exclusions on line 1 and going back to that. Line 1 and 6, less line 6, what does that mean?
This, okay, so basically, these are the total,
Let me try. You can't by deliberation saying, we're not paying your interest on your debt.
Okay,
So it's taking that out and saying this is the discretionary piece. Is that a fair statement?
very good. Okay.
Yep.
All right. Anything else?
nope.
I'm good. Jim, anything?
Yeah, I'm good.
Matt, if you don't have anything else, we can wrap up.
Yeah, I don't have anything else.
All right, so then the meeting is adjourned and we'll bring in the ISA folks.